This is Scott Becker with the Becker Private Equity and Business Podcast. The first story we're following today, and a really important story in the long run, is U.S. Treasury auctions are going poorly. So this is the headline. There's two key points here. The U.S. is always issuing debt, and the acceptance of that debt depends on several different things. One is people's belief in the trust and credit of the United States. They'll be able to pay that back. And traditionally, the United States has been the safest place to invest. So in the long run, it's been sort of the haven for investors in cash in safe places. Second is what the inflation picture is. So when the U.S. has trouble issuing debt at the rates they'd like to issue it, it means three different things. One, the U.S. is paying more on interest than it would otherwise have to pay because they're having to pay a higher yield and a higher interest rate to get people to buy U.S. bonds. Second, more troubling in the long run, is concerns that it means people have higher concerns about the strength of the U.S. credit in the long term. And this relates largely to deficits and basic strength and solvency and issues of safety for the United States. So the more that we have too much deficit, the more we're going to have to pay. We become almost like a junk bond issuer, and that's an overstatement, but we become a higher yielding payer because people won't buy our bonds unless we pay more. And that's a signal that our deficit's getting too big. The third issue that it brings in is inflation continuing to go up, and will interest rates, the Fed, keep rate policy high? People will buy bonds at higher yields because they believe that inflation is still going up, and thus they're concerned about buying long-term bonds because they're afraid rates will keep on going up, and thus they're concerned about buying long-term bonds because they're afraid that rates will go up over time, and thus if you get stuck at, let's say, a 4.5% yield, 5% yield, but yields go to 6 or 7%, your bonds become less valuable because the government's got to pay more later. So again, three core concerns here. One, we're paying higher interest rates. Our interest costs now are higher than our defense cost. Second, the deficit signals concerns about the long-term creditworthiness of the United States. Third is concerns that inflation is continuing. So again, Treasury auctions go poorly, three core thoughts. Thank you for listening to the Becker Private Equity and Business Podcast.